Hey everyone, this is Josh with JDB Business Solutions, and today we're going to do a short video on filling out a Schedule C. Schedule C is used to report your business income. It is mostly for people who are sole proprietors, meaning you never set up any business entity, and it's also for people who are in an LLC and it's called a single member LLC, meaning you're the only member. You don't have any partners. So if that's the case, you'll also put this on your Schedule C. A Schedule C is just a form in your personal tax return. It's going to take all the information, it's going to summarize it here, and it's going to bring one number over to your 1040 to go either offset or add to your income from other sources like W-2s, that kind of stuff. So a lot of people find this form pretty confusing. After you see it, it's pretty straightforward. So it starts out, it wants to know the name of the proprietor, which is you. So in this case, I'll put my name, social security number, 000000. Okay. Principal business or profession, including product or service. So this is kind of what you do. For this example, we'll use my business. We'll say tax preparer. The business code, it's a 6-digit code, and each sort of industry has their own code. If you're using tax software, they're going to give you kind of a drop-down menu to choose from. If you're trying to fill this out by hand, which I strongly recommend you don't, but if you do, just go to Google and Google the business code for whatever, business code for retail sales. And something will come up, it'll give you a code you can use. So let's just make up a 6-digit number here. Business name. If you never set up a business entity, this could just be your name, in which case you won't fill this out. If you did register with the state as an official business, you're going to put your actual name here. So in my case, it will be JDB Business Solutions. Your employer ID number, that's going to be the 9-digit code you registered with the IRS with. There is a chance that you never did this if you're not a corporation. So you'll know if you did it. You registered with the state or with the IRS, and they sent you a 9-digit number, 2 digits, dash, then 7 more digits. So yeah, there we go. It's not coming out quite right, but that's the gist of it. Your business address, whether you have a separate office or it's just in your home, you can put the address in here where you do business. Okay, so that's the easy part. Other than the business code, everything else is very straightforward. And the business code, again, you can just get by Googling your industry, business code for whatever industry you're in. Part F here, accounting method. This will definitely throw a lot of people off. So there's basically 2 choices. Don't worry about the other. There's very low chance you're in the other. You're either a cash business or an accrual business. Most of you who are watching this video who are coming to our website are cash businesses. So what that means is you record your income as you receive it, and you record your expenses as you pay them. You don't have accounts receivable. You don't wait. Someone can't buy your product on credit, and you don't pay people back on credit. You only record it when you receive it or when you actually pay it. Accrual is just the opposite of that. You do have accounts receivable, and you count that as income even before you receive it. Or you have an expense that's not due for 30 days, but you still count it as paid, even though it's going under accounts payable. So most of you will fall under the cash method. If you do fall under the accrual method, you may want a little more help with this. So for our sake, we're going to say cash. Did you materially participate in the operation of this business during 2012? Hopefully for most of you that will be yes. It opens up a few other things if it's no, but if you're on this website, you're materially participating in this business, so it's going to be yes. H, if you started or acquired this business during 2012, check here. So only check this one if the year you're filling this out is the first year that it was in business. Did you make any payments in 2012 that require you to file Form 1099? So if you're not familiar, a 1099 is something you have to fill out if you paid someone $600 or more during the year. They're called independent contractors. They're not employees. They're just someone you have do work here and there, and you have to send these out if you paid them more than $600 for the entire year. So if you did, click yes. If you didn't, obviously click no. If you click yes, you got to go down to J, and they say, if yes, did you or will you file required forms 1099? You better click yes here. If you're admitting that you needed to file 1099s and then you're saying that you're not going to file them, you're going to have some issues. So if you clicked yes above, you better click yes there. Okay, part 1, income. So the first line here, they want to know what your gross receipts or sales is. And this actually gives people a lot of confusion that I do tax returns for. Your gross receipts or sales simply means the amount of money that someone paid you. It doesn't matter how much you had in expenses, how much you paid for the item that you then sold. All they want to know here is how much you actually paid, or how much someone actually paid you, the exact amount they paid you. So if you sell t-shirts for $10 per t-shirt and you sold 1,000 of them, your gross receipts is $10,000. Again, it does not matter what you had to pay to get those t-shirts. Line 2 here, returns and allowances. If someone had to make any returns to you, you'd put that there. We'll say 0. Most small businesses don't really have returns. You may. Line 3, subtract line 2 from line 1, so $10,000. Cost of goods sold would be, okay, cost of goods sold. This is where you're going to list what you paid for it. So again, going back to this t-shirt example, if you had to buy each of those 1,000 t-shirts for $4, you're going to have $4,000 in cost of goods sold. Okay, so it's just what you spent to make the item that you sold. If you're a service company, you're probably not going to have to worry about cost of goods sold. This is mostly just for product companies. So it's what you spent to acquire what you later sold. I put $4,000 there for an example, but in my case, I'm a service company. I have no cost of goods sold. So then your gross profit, again, you're just subtracting here. Other income, this generally would be interest income if you have a business bank account. There could be, here they list federal and state gasoline and fuel tax credit or refund. Most of you aren't going to have to worry about that. This will generally be 0 unless you do have a business bank account that you get some interest in. So gross income, bring it down here again, $10,000. Okay, now we're getting into the other expenses. Line 8, they want to know what advertising expenses are. A lot of the small businesses say to me that they don't have any advertising expenses, but typically if you sit down and think about it, you probably do. You probably bought business cards, that could go under advertising expense. Any kind of flyers you made up could go under advertising expense. A lot of people now are spending money on Facebook advertisement. That goes under advertising expense. One big thing you cannot put here that I have had people say their prior CPA recommended to them, you can't list your meals and entertainment as promotional or advertising expense, so you can take 100%. That, if someone's telling you to do that, it's incorrect. There's a separate line for that, and they're going to reduce the amount you can take. So do not put your meals and entertainment under advertising. Okay, section 9, car and truck expenses. That's just what it sounds like. Your car and truck expenses, what you spent mileage-wise. For most businesses, you're going to use the standard mileage rate, and we just had an article on that on Monday this week, I believe. And basically, there's 2 methods. You can track the actual expenses, and then multiply that by the percent you use your car for business. Or you can take the easy route and just use a standard mileage rate, which is in 2012 was 55.5 cents per mile, and you just multiply that by the number of business miles you drove. So let's say I drove 1,000 miles. I'm going to get to take $550 in business expense or business mileage. And that covers another big misused area here is if you use a standard mileage rate, that covers everything associated with your car other than your interest or taxes if you have a loan on the car. But it covers everything else. It covers your car insurance. It covers repairs on your car. A lot of people think they can take that separate. No, this covers everything associated with your car except the interest and taxes. So you're done with car and truck expenses if you take that standard mileage rate. Commissions and fees, if you had to pay anyone any commissions or fees to help you sell whatever you're selling. Contract labor, if you had someone that you had a 1099, you could list it here. It could also go up above under cost of goods sold. It kind of depends. You might want to talk to a tax professional if you're having trouble deciding there. Depletion, you're most likely not going to have to worry about. Depreciation. Depreciation is going to be hard for you to figure out on your own. What depreciation is, if you have assets in your business, you can't expense it all at once when you buy it. You have to depreciate it over a set amount of years. How many years is decided by what kind of asset it is. For example, if you have a rental property, the house would be depreciated for 27 and a half years. So this can be a little tricky. Tax software has columns that you put this in, and it'll figure it out automatically for you. This is not something you want to do by hand. Employee benefit programs, most of you will not have to worry about that. Insurance, and it says right in parentheses, other than health. Your health insurance does not go here. Your car insurance does not go here. Typically what's going to go here is your liability insurance for your business. So let's say I paid $100 a year in liability insurance. That would go there. Interest expense, they could be mortgage. If you have a mortgage on your building that you're using for your business, it could be interest on a business loan that you take out. It could be interest for your car, since that wasn't covered in Part 9. Any kind of interest that you pay on any kind of business loan would go here, either in 16A or in 16B. 17, legal and professional services. This is basically your accounting fees and your lawyer fees is mostly what's going to go under here. What you paid someone to do your tax return last year, your business tax return, and if you had hire an attorney to do anything. So let's say I paid $500 for a tax return last year. Office expense, this is just going to be your little office expenses, pens, pencils, stamps, paper, maybe even printers if it's small enough. It could add up to quite a bit, but most of the items aren't going to be very much. So we'll say $200 total for the year in that. Pension and profit sharing plans, again, for the size businesses that we're focused on this site, you're not going to have to worry about that. Rent or lease expense on line 20A and 20B. This is a big one. Obviously, if you're renting the building you use, that's going to go here under other business property. So let's say I paid $3,000 for the year in rent. And then on 20A, a lot of people have to rent out equipment for their business or machinery or vehicles even. Let's go back to the example of someone making t-shirts. They probably have some kind of equipment that they use to make those t-shirts, and they may not have bought it. So if you have rent on those or lease payments, that would go there. Repairs and maintenance. Repairs and maintenance sometimes gets confused with improvements. Repairs and maintenance is just what it sounds. You have to spend money to repair or maintain something you have. So going back to the machinery example, if it breaks down, you have to pay someone to come fix it. If your computer breaks, you have to pay someone to come fix it. This does not include improvements, which often gets mistakenly put in here. Improvements to your building or any of your property, like if you did a remodel to your office, that goes under improvements, not under repairs. And it's an important distinction because improvements have to be depreciated and cannot be expensed all in the same year. So this is just repairs. Supplies, line 22, very similar to line 18, office expense. Whatever you didn't include there, whatever other little expenses you have could go here. I mean, it could be anything. All those little $10, $20 things you're going to the store and picking up that add up to a couple hundred by the end of the year. It could even be a couple $1,000s by the end of the year, depending on how big your business is. But this is just going to be the small expenses similar to office expense that you don't include anywhere else. So let's say it was $50. So taxes and licenses, just what it sounds like. Any taxes you pay, for example, sales tax, payroll tax if you have employees, maybe property tax if you own the building that you use for your business. Then licenses, a lot of people have to have special licenses with their states to conduct business, so that fee would go under there as well. All right, line 24, A and B. This is another big one that's difficult to get right. So 24A wants to know travel. This would include any travel you did for your business. If I flew from Denver to New York City for a conference on tax preparation, I could write off the flight, I could write off the hotel I stayed in, I could write off any cabs I took, I could write off any rental car, anything associated with that travel that was for business would go on line 24A. If you're using tax software, they'll have you separated out between airfare, lodging, car rental, that kind of stuff. And then you'll come up with a total here, we'll say $500 for the year. And then 24B, deductible meals and entertainment. And again, this is one that is a little difficult for people to get here. So what it means, meals and entertainment is deductible if it's in the course of your business. Usually, most people have this occur when they take clients out, or clients or prospective clients. If I have a big business owner that I want to get as a tax client, and I take him out, and I spend $500 going to dinner and then going somewhere for entertainment for that night, I can write that off. The kicker is they're only going to let you deduct 50% of that. So if you spent $500, they're going to let you deduct $250. Most tax software, you put in the full amount and they'll automatically take half of that. If you're doing it yourself, you got to put half in. So let's say I spent $500. I'm allowed to deduct $250 of that. Utilities. This is if you pay electric, gas, water, any kind of utility bill you have associated with your business, you deduct there. Wages. This is if you have employees, you'd put the wages you paid them there. Or wages could even be wages to yourself. If you're in an LLC, taxes, and S Corp, you have to pay yourself wages, and this is where you have to actually report the wages you pay yourself so you can take those off the income. Other expenses. Okay, so this is anything that didn't fall under one of these 27 categories we've already covered. You'll typically have, and when you use tax software, you'll have a place you go where you list out these other expenses. So, man, there's so many options. It just depends on the industry you're in. It could be conferences. The conference we talked about going to in New York City. If that was $100 to go to that conference, that you just write conferences and put that there. Education. If I have to have continuing education every year, I could put education $600 for the year. So basically, you're just going to list it out. The bigger the expense is, the more specific you want to be on what the expense actually is, not just generic. I see a lot of people putting a miscellaneous category and putting thousands of dollars in there. Don't do that. You can have a miscellaneous category, but don't make it more than a few $100s or so. So let's say all my other expenses added up to $200. Okay. So total expenses, you're just going to add these all up. So let's see, $650, $1150, $1350, $4350, $44, $49, $5150, $5350, $5,350. Okay. And that's just adding up lines 8 through lines 27. So your tentative profit, take the line you just figured out, the $53.50, and subtract it from line 7, your gross income. In this case, that's going to leave me with $4,650 in profit. Finally, line 30 here, expenses for business use of your home. There's a whole other form you have to fill out for this that automatically takes it over to line 30. You're going to fill out form 8829. And we'll do a separate video on that in the future because that's very confusing as well. But if you fill out that form, it automatically takes it over to line 30 if you're using tax software. And then finally, you come to your net profit, which is going to be, for me, that $46.50. If you had home expenses, it would be subtracted from that. And there you have it. So that $46.50 in my case will, in line 31, if I'm using tax software, it'll automatically carry over to my 1040 and add it to my total income. I'm also going to pay self-employment taxes on that, roughly 15%, and that'll be automatically calculated as well. So whether you're filling this out yourself, which I highly recommend you don't, if you have a business, hire someone to prepare your taxes. You're going to get your money's worth out of it. But even if you're not preparing them yourself, just watching this will give you an idea of how to organize your stuff for your CPA. If someone came to me with all these categories listed here and the final numbers on all of them, I would charge them a lot less for their taxes than someone who just gives me a shoebox full of receipts. So track your expenses throughout the year. Try to categorize them as close to these categories as possible. You'll save yourself time. You'll make sure you're getting the most deductions possible. And you should also be charged less for your tax return when you're that organized. So hope this helps. Hope this helps you understand your business a little more, the expenses you can take, and how to track them. So see you guys next time.